In this video, I will give you one example based on the case number 2 in the previous video, case number 2 was where we didn't have any beginning inventory, but we had some incomplete units at our ending inventory. So in this example, I used the information in the previous video. You can watch that first and then come and watch this one for the pre kind of a live session that might have, let's say, at the end of the week. So again, I use the information like we have 100 units and we have $45,000 cost. So, but I gave you some extra information here that I just want you to review. I'll go over the information here first before I start to go over this example. So I have these number 1, 2, 3, 4 that I want you to understand and maybe remember them. So step number 1 here, we have something called determine unit flow. So how many units are we starting, how many units we had in the beginning inventory, how many units we have at the end of ending inventory, and how many units we account for. That's our step number 1. In step number 2, I have here something that we need to calculate the equivalent units in our production. So I think in the previous video, I explained that how we convert incomplete units to complete units. And then in step 3, we calculate cost per equivalent units, and we use that cost per equivalent units to assign our cost to ending inventory in terms of direct material and conversion cost. And if you want to go back to our previous chapters, what is conversion cost and what is prime cost, we had those in kind of previous chapters, but if you forgot, I will briefly explain. Prime costs are direct material and direct labor. In conversion costs are direct labor and manufacturing overhead. So usually when we have a situation like that, we account for our direct material as all units are completed in terms of direct material. That actually makes everything easy for us in process costing. So the explanation for that, because when we transfer the direct material from our storage to production line, we can account for those regardless of if they are part of the complete units or if they are part of incomplete units, because we easily can account for them. The problem is that let's say direct labor for incomplete units cannot be account for. That's the problem. Manufacturing overhead for those incomplete units cannot be accounted for. That's the problem in process costing. But what makes it a little easier is we can account for direct material 100%. You're going to see that in this example. So I have beginning inventory 0. As I said, this is case number 2. So we don't have any beginning inventory. So beginning inventory, I have 0. This is my 0. We started during this period by transferring 100 kind of direct material for 100 units to our production lines. So we have 100 units to account for. We completed 80 units, and we have 20 units left in our ending inventory. Again, 100 units, so 80 completed, 20 incomplete, so this is a total of 100 units. And our total cost is, I have $30,000 direct material, and I have $15,000 conversion cost. These numbers will be given. So the good news is you have complete information, right? Even though they tell you the degree of completion of these 20 units, that I discussed that in the previous video. So the step number one, actually, we already did that. We already did our kind of determining the unit flows. We know how many units we start for. We know units that they are 100% completed, and we know the units that they are partially completed or they are incomplete. Okay, so we go for step number two. We need to calculate the cost of our equivalent unit. So, I mean, or simply we calculate the equivalent units in terms of complete units. If we have 20 incomplete or partially complete units, how I can compare those, convert those to complete units? Well, we have a 20% rate of completion. So 20 times 25%, I get 5 units completed. So when I convert 20 incomplete units by using 25% rate, I get 5 complete units. So in terms of direct material, I have 80 units completed. See that? Direct material, 80 units completed. Conversion cost, because these units are already completed. Conversion cost, 80 units completed. Ending inventory, 20 units incomplete in terms of, I explained that when I started this video. In terms of direct material, we assume everything is completed. So 20 units completed. So my direct material, 100% completed. So I have 100% here. In terms of conversion cost, 80 units completed and maybe transfer out to other department or maybe to finished goods. But and in terms regarding the 20 partially completed units, I have 5 units completed. So in terms of conversion cost, I have 85 units completed. See that? So compare the 100 units, direct material, 85 units, conversion cost. So how do I use these? Well, I have the total cost here of $45,000, $30,000 direct material. So I get the $30,000 and divided by 100, I get $300 cost per equivalent unit for direct material. I use the same method here for conversion cost. I have $15,000 conversion cost here. I divide it by 85 and I get 176.47 cost per equivalent units. Okay, so I completed cost per equivalent unit. I could calculate that. I computed. So direct material is $300 cost per equivalent unit, and conversion cost is $176. 176.47 cents. So how do I use those? Now we are at the step 4 right here. See that? Very easy. So I use the 100 units completed times 300. I get my $30,000 cost, and I get 85. I take the 85, which is come from this part right here, in terms of conversion cost, multiply that by 176.47, I get 15,000. Right? So the total cost here is 45,000 equal to this $45,000 total cost. So all I did here, I calculated the cost per equivalent unit, and then I used that rate to compute the conversion cost, because I need to know how much is the direct material cost, how much is the conversion cost to assign to direct material and conversion cost. So as long as I get these two numbers equal, that means this problem is solved. Now, I gave you a very, very simple example here. You can use this one and go back to our PowerPoint presentation, which I give you the slide number if you want to use that. Use this information here and go for, let's say, slide number 12. If you go to our PowerPoint presentation, chapter 17, and find the slide number 12. So slide number 12 has example with no beginning inventory, but some ending inventory. So again, use this simple example here and take a look at what we have in our, let's say, slide number 12, then slide number 13, and look at number 14 where we have a journal entry. I will cover that part when I see you maybe next time. So watch this video and watch the previous one, and then read the chapter and prepare for maybe our live session on either Wednesday or maybe Saturday or Sunday. And let me know if you have any questions.